When you merge the first 3 letters of the word foreign with the first 2 letters of the word exchange, you'll end up with the term Forex. Forex is short for foreign exchange. And in case you didn't know, the term Forex simply refers to the act of simultaneously exchanging the currency of a particular country or region into the local currency of some other country or region. If you've ever traveled abroad to a foreign country, I'm pretty sure you must have had to change some of your home country's local currency into the currency of the country you were traveling to, right? Well, if your answer to that question was a yes, then guess what? You've already participated in the Forex market without even realizing it. At this point, I think it's worth mentioning that you're probably going to come across lots of foreign currency traders who are going to refer to Forex as FX or currency exchange. So don't get confused when that happens, okay? Alright, moving forward. So, how does Forex work? Well, in order to understand how Forex works, we're going to have to use an example. Imagine you were going on a holiday from Britain to Japan. And since you're going to have to pay for things you'd like to buy in Japan with the Japanese yen, you would need to change some of your British pounds to Japanese yen, isn't it? Well, assuming that the exchange rate for the British pound against the Japanese yen is currently sitting at 150.00. What that exchange rate is telling us, in simple terms, is you're going to get paid 150 Japanese yen for each British pound you're willing to sell at the current market's price. To keep things simple, let's say you decided to exchange 100 pounds to Japanese yen to serve as your pocket money. But as fate will have it, your good friend over in Japan paid for all of your expenses so you were able to get through your stay in Japan without spending a single penny of your money. And since your month-long vacation has just run its course, you now want to exchange the 15,000 Japanese yen in your wallet for some British pounds at the currency exchange booth in the airport since you just got back from Japan. Even though this example is about to get a bit dramatic because currency exchange rates rarely ever change this much within a short period of time. Assuming the exchange rate for the British pound against the Japanese yen fell from 150.00 to 125.00 when you got back from Japan, that would mean that you're going to get paid 1 British pound for each 125 Japanese yen you're willing to sell. As a result of this, you're going to get paid 120 pounds for your 15,000 Japanese yen instead of the 100 British pounds you paid to purchase them just before you embarked on your vacation to Japan if you wanted to exchange all of them for the British pounds. In this example, while you were probably out and about enjoying your holiday in Japan, you earned a 20 pounds profit on your 15,000 Japanese yen simply because the exchange rate of the British pounds against the Japanese yen fell from 150.00 to 125.00. And that, ladies and gentlemen, is a simple but typical example of how a change in a currency's exchange rate can affect the value of your money. Just like I gave you an example of you needing to exchange your local currency to the currency of the country you are visiting on your vacation in order to buy things over there, countries and multinational businesses also find the need to exchange currencies in order to facilitate trade and exchange of goods and services. For example, if the United States of America wanted to buy crude oil from Canada, the US government is probably going to have to exchange some United States dollars in order to pay for the oil they'd like to buy from Canada. And this is part of the reason why foreign currency exchange exists. Here's a quick question for you. How serious are you about leveling up your trading game and becoming one of those consistently profitable forex traders who are able to squeeze profits out of the forex markets like a broken ATM machine? Well, if you're ready to stop spinning your wheels, guessing your way through trades, and finally cracking the code to earning consistent profits through forex trading, then I've got something you're absolutely going to love. And guess what? It's absolutely free. I've spent months putting together a profitable forex trading crash course, which is designed to help you go from being a struggling trader to becoming a consistently profitable forex trader in a step-by-step manner. By the end of the course, you'll know exactly what you'll need to start and stop doing in order to join the ranks of the lucky few consistently profitable forex traders who are able to squeeze profits out of the spot forex market like a broken ATM machine. So what are you waiting for? Head on over to www.fxmindtricksacademy.com/blueprint to get free instant access to the crash course. It's time to start trading smarter, not harder, and finally achieve the results you've been working so hard for.
Don't let this rare opportunity pass you by. Take action today and watch your trading game transform for the better. See you on the other side.
Now that you know what Forex is and how it works, I bet you're probably itching to know what Forex trading is and how Forex trading works, aren't you? Well, before we talk about how Forex trading works, you're first going to need to know what Forex trading is. So, what exactly is Forex trading? Well, Forex trading is basically the act of trying to make money from changes in the value of currencies. Remember our holiday example? When you exchanged your 100 British pounds for 15,000 Japanese yen, you weren't trying to make a profit. You simply needed some Japanese yen to spend while you were in Japan. But imagine that you exchanged your British pounds for Japanese yen because you believed that the Japanese yen was going to become more valuable compared to the British pound, and you planned to exchange your yen back into pounds later on. Now, you're no longer exchanging currencies because you need to spend them. You're exchanging them because you're trying to make money from the change in their value. And that's essentially what Forex trading is. As Forex traders, we're constantly trying to figure out which currencies are likely to become stronger and which currencies are likely to become weaker. We then use that information to decide whether we should buy or sell a particular currency pair with the goal of making a profit if our prediction turns out to be correct. And that's really all Forex trading is at its core. Buying or selling currencies because you believe their value is going to change and trying to make money when it does. But how do you know when to buy and when to sell? I mean, you can't just flip a coin and hope you pick the right direction. Well, that's exactly where having a profitable Forex trading strategy comes in. And that's why in this video, I'll teach you a simple but profitable mechanical Forex trading strategy for beginners, which uses a clear set of rules to help you determine exactly when to buy, when to sell, and when to simply sit on your hands. Click on the video on the screen now if you'd like to see that trading strategy in action.